Hello and welcome. You're watching Market Cafe with me, Snehisha, and with me is Shreyansi Singh. And well, you're watching ET Now. Now, this is a show where we'll take you through all the important stories that we've been tracking for you, domestic and globally, while you've been fast asleep. And in the second half of the show, we'll take you through all the stocks that could be potential buzzers in today's trading session, as well as what the brokerages are flagging off for us bright and early this morning. So with that, let's kickstart the show with the global handover. And Shreyansi, good morning. Take us through the moves that Wall Street saw yesterday, continuing their rally from the previous session, and the all-important Fed decision expected tonight for us. So tell us a little bit on what's predicted and what's going to happen.
Absolutely, you pretty much summed it up, right? So when you look at Wall Street, that is definitely coming off a positive session for the major benchmarks, and that's the kind of move that you're seeing this morning. So the kind of handover that I'm looking at is that the Dow, the 30 stock Dow, also advanced about 320 points, or 0.8%, notched its best day since February 22. And the S&P 500 as well rose roughly 0.6%. When you look at the Nasdaq Composite also, that added 0.4% as well. And recent weakness in tech stocks has had some investors deliberating whether the artificial intelligence rally is slowing as other parts of the market gain traction. Now on Tuesday, communication services, which includes the likes of Alphabet and Meta platforms, was the only losing sector in the S&P 500, as energy and utility stocks led the broader index. Now, some underperformance came in from the semiconductor stocks as well. So that is largely the handover that you saw. The Fed is broadly anticipated to keep interest rates unchanged at the conclusion of its two-day policy meeting. Some are concerned that a recent spate of hot inflation reports could result in even fewer cuts than markets are anticipating. When you look at European markets as well, they closed slightly higher. And after a muted session, the pan-European stock 600 provisionally finished up about 0.3% up, with sectors mixed. So auto stocks rose 1.2%, while when you look at food and beverage stocks, they were down 0.5%. When I'm looking at DAX and CAC as well, uptick coming in for both of these. So DAX was up about 0.3% and CAC up more than 0.5%. So that's the kind of handover that we're seeing this morning.
Well, absolutely, and with that, let's also take a look at what's happening in the world of oil then. And oil prices rose to multi-month highs for the second straight session on Tuesday. So oil prices have been on the tear as we speak, and traders assess how Ukraine's recent attacks on Russian refineries would affect global petroleum supplies as well. Now, Ukraine, remember, has stepped up attacks on Russian oil infrastructure this year, with at least 7 refineries targeted by drones just this month. The attacks have shut down 7%, or around 370,000 barrels per day of Russian refining capacity. This is according to Reuters calculations. And oil gained support from declining crude exports from Saudi Arabia and Iraq, as well as signs of stronger demand and economic growth in China and the US. Now, you also had another factor that was boosting the WTI, US single-family home building. That data rebounded sharply in February, the Commerce Department reported. Now, home building could boost economic growth, supporting oil demand as well. So on the back of all of these news flows, you had WTI at 83.1, so a price hike over there as well. Brent has yet again, managed to be above that $85 per barrel mark at $87.2 dollars per barrel as we speak. So, well, this uptick in oil prices continues, and Shreyansi will take a look at how that pans out for us. And staying with oil then, global energy demand will increase faster than the rate of population growth through 2050, says the CEO of Kuwait Petroleum Corporation. He also added that demand will peak this decade, which means that there is going to be a requirement of more energy intensity for the population. Meanwhile, to combat the situation in Kuwait, Petroleum Corporation plans to increase its production capacity to 4 million barrels per day by 2035 from the current 3 million barrels per day.
Yeah, absolutely. And there's actually a lot of cues that we should keep our eyes on, right? First of all, there's of course the all-important FOMC rate decision. A lot has been said about it, and it remains to be seen how that impacts our market as well as US markets as well, and let's see what that decision indicates. But from the UK, you do have CPI as well as PPI data, and in the Eurozone, you do have consumer confidence data. So keep an eye on all of those data sets along with China's loan prime rates. Now, in terms of corporate action, there's of course the last day to buy Dwarkesh Sugar for buyback, and Paisalo Digital will be trading ex-bonus in ratio 1:1. So keep an eye on those two counters as well. Now, Hudco board will be mulling fundraise plans, and that is another counter that will remain in the spotlight. Now, the lock-in period also ends for Moti Sons Jewelers, as well as Muthoot Microfinance for 3% each. So keep an eye on both those counters as well.
Well, yes, and with that, let's kickstart this morning with some important global macro news then. And the yen tumbled to a 4-month low after the historic and widely anticipated decision to end its negative interest rate policy. While on the other side, the dollar strengthened ahead of the much-awaited rate decision from the FOMC, which is set to take place today. Analysts say that the market has taken it as a green light to increase the short yen positioning that was already in place. Now, given the forward guidance from the Bank of Japan that was fairly cautious and not enough to draw further hawkish repricing in the Japanese market rate, we also caught up with Peter Cardillo, the chief market economist at Spartan Capital Securities LLC, about the same, and here's what we got from him. Listen in.
If inflation should really rise above that 2%, then obviously not far in the future distance, we'll be looking at the first rate hike. But again, it'll be somewhat minimal because we're back at zero. Of course, quantitative easing is all done with. And so I think the impact on the Japanese economy for now is not going to be all that negative. One of the main culprits of negative zero rates for 17 years caused the value of their currencies to plummet against the dollar. We still see a strong dollar, but that all could reverse if and when they begin to raise interest rates.
And all eyes are definitely on the two-day Federal Reserve meeting. Experts believe that the Jerome Powell-led central bank will maintain interest rates unchanged, with significant attention on the dot plot. Gaurav is joining in with the snapshot on that.
Well, yes, FOMC meet will conclude soon and interest rates are not expected to change according to the market expectation, but they will definitely keep an eye out on dot plot. Because why? During this meeting, they are not expecting any kind of changes in terms of GDP projection or unemployment rate, but they will be looking out for cues where interest rate changes will happen in the coming time. So why dot plot is important is that if we talk about inflation, we have seen some kind of deceleration happening from in terms of inflation from the peak levels, but the recent data has shown that we have seen some kind of acceleration re-happening in 2024 in US. The current concerns about re-acceleration of inflation is basically short-lived according to the industry experts, and they believe that the projection for inflation are not going to be changed from the Fed. But what they expect is that any kind of negative surprise is substantially going to be a risk across the asset markets. This could also decide the rate cutting cycle for the next months, and this will also result in the central bank to deviate policy stance from the market's current pricing. And on back of this, they will be definitely watching out for the dot plot because this will estimate when the rate cuts will happen in 2024. Apart from that, they are also anticipating the dot plot to feature 25 bips rate cut, 225 bips rate cuts during 2024 versus what they were expecting at 3 rate cuts during 2024. So definitely it is worth keeping an eye out on how the dot plot turns out for the investors as well as for the market in the coming conclusion from meeting.
Well, all right, let's shift focus and let's talk about some other stock-specific news then. And you have, as part of the cost-cutting exercise, Uni PLC will be separating its ice cream arm as a standalone entity. Now, in a statement, the company's chair, Ian Meakins, shared how this exercise is aimed at streamlining the business to accelerate growth, albeit at the cost of slashing 7,500 jobs. Now, let's keep it with the FMCG sector because that continues to struggle with the FMCG index being among the top losers and on the decline for the second straight session yesterday. There are concerns about a slow rural recovery and there's a likely rise in input costs, and these are some of the factors that have been weighing on this index. But what else are some of the factors that have been ailing this sentiment? My colleague Winnie is joining us with all of those details. Winnie, good morning. Take it away.
What is actually coming in is that FMCG index has fallen for the second consecutive day, more than 2% fall that we saw at the end of the day for the FMCG index. And obviously, when you're looking at it, the biggest intraday fall that came in today for the FMCG index since the 8th of Feb. So why was there pressure? One, obviously, everyone was talking about that rural recovery. Seems like that's not happening at the pace that one was expecting at. And for FMCG companies, around 35 to 45 to 50% of their revenues actually come in from the rural space. So yes, rural recovery still continues to be a concern. We have not seen that coming in even in Q4. Now, fears around rising input costs. When you talk about palm oil prices, crude prices, Brent crude oil prices, all of them have seen an increase in the last 1 month as well as last 1 week as well, a sharp increase that has come in these prices, and that could be something that could come in as a pressure for them, and in turn a pressure that could come in terms of the margins of the company as well. So yes, pressure could be seen maybe on the possibility of the margins of the company. If we see these raw material prices still continue to rise, then it would be a concern coming in, like you can see Brent crude oil prices as well as the palm oil prices. Other than that, raw material deflation that we were talking about, now that's moved back, and maybe that will only start happening from the second half of FY25, and that is why that could be a concern coming in terms of the margins of the company. Channel checks are suggesting that yes, mass products still have not seen a recovery. There's no improvement in terms of the demand for mass products as well, while premium products continues to do well. So that K-shaped recovery is something that would continue for these FMCG companies. And yes, if Q4 print is quite weak in terms of the result, then maybe one could see downgrades coming in, as what analysts are highlighting, as well as channel checks are suggesting that we are not seeing any uptick in terms of consumption even due to the festive season. Whether you look at a Holi or a Eid, that's not seen anything in terms of an uptick for the consumption pack. So when you're looking at it today, HUL ended at a 52-week low, sharp fall seen in ITC, Nestle as well as Britannia as well, which saw a sharper fall coming in. And in terms of valuation also, when you look at it in terms of the FMCG index as well, the Nifty FMCG index in the past has seen a reversal only coming in once they have fallen to those levels of around 25 to 30 times in terms of the PE for the FMCG index. So yes, that's what we're keeping an eye out on in terms of valuations also. Where it stands at is that the peak PE was at 42 times in the last 1 year, currently at 38 times, and the low was at 34 times. So let's keep an eye out on how this pans out for the FMCG index. As of now, we saw a crash coming in, no recovery in the rural area is what we are seeing.
We're back with the latest edition of Times Now Summit. Over the years, Times Now Summit has been championing pertinent national agenda points where India's leadership, leading thinkers and national influencers come together to define the action plan for India's progress, themed India Unstoppable. This year, we will focus on charting India's remarkable journey and its increasing influence on the global stage. Join us on the 27th and 28th of March in New Delhi and watch the who's who of the political corridors share their views. Do stay with us for all the highlights and all the action, as the action begins here only on Times Now.
Powered.
Welcome back. You're tuned in to Market Cafe on ET Now, and promoters seem to have been on a selling spree over the past 1 month, offloading stake worth 43,000 crore rupees. This was absorbed by foreign and domestic investors. Cheryl is standing by with the detailed analysis of this. Cheryl?
Well, TCS was definitely a stock that was in focus on back of the Tata Sons offloading stake, but it's just not TCS that was actually in focus. Over the last 1 month, we've seen a lot of promoters sale take place to almost the tune of 43,000 crore rupees over the last month alone. And what is amazing is the fact that all of these block deals have been very well absorbed by foreign as well as domestic investors. In most of these block deals, you've seen a lot of marquee investors actually come ahead and participate in the block deals. So let me take you through a few block deals that have taken place over the last 1 month. Where first, let's talk about ITC. You had BAT was the seller. Remember, it's been in news over the last few months that BAT will go ahead and offload a part stake in ITC. That transpired. The entire total amount was worth about 17,485 crore rupees. And the reason why actually BAT went ahead is they wanted to do a share buyback of the promoter company. Apart from that, yes, today's TCS as well, Tata Sons offloading that stake. Approximately the size of that would be about 9,362 crore rupees. And one of the reasons why Tata Sons went ahead with this sort of a part stake sale is in order to cut debt as well as fund the semiconductor capex. Apart from that, you had also Indigo that was in focus in the last 1 month. This is because Rakesh Ganwal also offloaded his stake in Indigo. That block deal was worth about 6,786 crore rupees. You had Whirlpool, where the foreign promoter offloaded stake worth about 4,039 crore rupees. And the reason for that sort of an offloading is in order to reduce its debt. You had Samil also that was in focus. You have Sumitomo that actually went ahead with a stake sale. And the latest of that lot has to be the AB Sun Life AMC, where you have Aditya Birla Capital as well as Sun Life that have come out with an OFS. So if you look at the total number is a whopping 42,786 crore rupees worth of block deal that took place over the last 1 month. And like I said, beautifully absorbed by FIs and DIIs. And if you look at the size, is actually 1.6 times that of the monthly equity inflows into MFs. The 42,786 crore rupees also is equal to about 2.2 times of the monthly SIPs in mutual funds. So you had a lot of interest coming in for the promoter stake sale, no doubt. It's been a huge amount, but one thing and very key to note is that it all has been beautifully absorbed by foreign as well as domestic investors.
Well, all right, Cheryl, thanks so much for taking us through that. That's a key update and a key positive coming in for the Indian markets as well. But India is witnessing a high structural demand and healthy outlook for corporates. This is as per Reserve Bank of India's March Bulletin. It also highlights the softening core inflation, but cautions that volatile food prices may impact the downward trajectory of retail inflation. Ankur Mishra is here with a summary of that report. Ankur, take it away.
Yes, strong signs of domestic economy coming from Reserve Bank of India's latest bulletin. It says that capital inflows have resumed strongly as investor interest flood back to India. Apart from that, the bulletin also says that high visibility of structural demand and healthier corporate as well as banks' balance sheet likely to be galvanizing forces for growth. As far as the inflation is concerned, the core inflation has come down and the softening of core inflation has been broad-based. Talking about specifics, the study till March 15 says that the pulses price have registered a broad-based increase. However, edible oil prices also continues to soften as per the latest indicators. But if you talk about cereal prices and specifically wheat, there has been decline till March 15 as per the latest bulletin, which has been provided by Reserve Bank of India. Remember, in the monetary policy also, Reserve Bank of India Governor Shaktikanta Das had stated that the target remains 4% inflation, and that should be achieved on a durable basis, not as one-off instance. Therefore, the monetary policy has to remain in a risk minimization mode and guiding inflation towards the target while sustaining the momentum of growth. The bulletin also mentions about the latest fuel price cuts, and it says that this may get pronounced in March due to the reduction in prices of LPG. As far as the global economy is concerned, that is losing steam, and with the growth slowing in some of the most resilient economies, all eyes are there on India, where the domestic economic factors remain strong.
Thanks, Ankur, for all of those details. But let's keep it with the macros then. Finance Ministry announced gross direct tax numbers for the financial year 24. It has registered a growth of 18.74% on a year-on-year basis. And many more numbers coming in. My colleague Sumit Chaturvedi is here to break down all of those numbers for us. Sumit, what is the story that these numbers are telling us?
It's a good news when it comes to overall tax collection. It's actually heartening to see in the last month of financial year, the growth is so much. If you look at figures, the gross direct tax collection for financial year 23-24 are up 18.74%. And net direct tax collection for FY 23-24 is up around 20%. So it is the provisional figures of direct tax, which is also up. But if I break it down further, and if I look at overall, the refunds are over 3,36,808 crore rupees. So data is there, but it shows overall how robust the overall the tax collection figure has been. We have been talking about GST figures on your show always every month. GST figures are good, and it shows the robustness of economy, the further advanced tax collection numbers which have gone up. So it's clear indication that government has more fund to now spend on social scheme, other scheme. So that's a good news coming at this evening. Finance Ministry has issued these numbers just a short while ago.
Well, all right, Sumit, thanks for all of those details. But as India braces for a long summer, AC makers such as Havells and Panasonic expect strong sales growth this year. Listen in to what each of those managements had to say.
Growth will be driven by consumer demand. The growth cannot be driven by producing. It is always driven because you are working, you are in a consumer market. So it is driven by consumer demand. Definitely, the seasonality plays a role.
Expecting a robust demand. We are already witnessing the offshoot of the same in South region, and the other markets are also very strongly catching up. So this season on the demand side, we are very optimistic. Second, we have also set a very challenging target for ourselves. We are expecting a 40% growth over last year season timing. Penetration level of 7 to 8% in our country. 10 million we have already crossed.
Well, time for a quick break then, but you don't go anywhere, because when we come back, we'll get a little more stock specific and tell you which stocks you should keep on your radar.
Hi there, welcome back. You're still watching Market Cafe with us on ET Now. Now let's take a look at IndusInd Bank's management meet. UBS has shortlisted the key takeaways and Gaurav is here with all of those details. Gaurav, good morning. Take it away.
Well, yes, IndusInd Bank met with the UBS met with the management of IndusInd Bank, and let's see how IndusInd Bank is forecasting their growth path for the months coming ahead. So for what they are believing is that they are going to be remaining highly focused on the profitable growth that is high. That is going to be ROE accretive, and the market share gain is also going to be a key focus area for the bank. Although the bank has not given any kind of guidance in terms of slippages, but the credit cost guidance has been given, which is going to be somewhere in the range of 110 to 130 bips. Lastly, if we also talk about net interest margins, that is going to be somewhere in the range of 4.2 to 4.3%, and the bank has been very confident on achieving these levels. If we talk about the LDR ratio also, that is below 90% for the bank, and bank is very confident that these levels can be maintained because they don't have any plans to increase this LDR ratio going ahead. Near term, if we talk about the asset side, they are going to increase the assets with the focus more on the retail deposit accretion, and on the liability side, they believe that competition is there, but that is going to limit the opportunities in the near term for the bank. But if we talk about the ROA and net interest margins, they are definitely going to be focusing more on the profitability side of the business. And if we also talk about the cost to income ratio, they are expecting to maintain this cost to income ratio somewhere in 100 basis point range for FY25 and FY26. That means a very positive outlook coming up from IndusInd Bank management for the time coming ahead.
About IndusInd Bank's management meet, but there's a host of brokerage notes this morning that are quite interesting. So which are the ones that you're looking at, and what are some of the key takeaways?
Well, yes, there are multiple brokerage notes today, but let's first start with ER&D services. Because JP Morgan has initiated on Cyient with overweight rating and a target price of 2,600 rupees per share, while they have initiated on Tata Tech with underweight rating and a target price of 800 rupees per share. What they believe is that ER&D is at a place to grow from here on in the IT sector. They have total addressable market which is increasing. Demand has been bottomed out. That means we may see demand coming up from this time. But if we talk about Tata Tech has a high concentration of clients, and at the same time they have excessive valuation, and that is why they are being a little underweight on Tata Tech. And if you also look at the preference in the ER&D segment, they would prefer Cyient first, then comes L&T and Persistent, and lastly it would come at Tata Tech. Next, let's talk about OMC segment, because Nomura has actually increased the target price for multiple companies. So for example, for BPCL, they have maintained buy rating and increased the target price to 735 rupees per share. For HPCL, they have upgraded to buy rating and increased the target price to 570 rupees. And for IOCL also, they have upgraded upgraded to buy rating with a target price of 195 rupees per share. What they believe is that the overhang is done now. We have already seen that the price cuts have happened, and from here on we may see marketing margins coming back to normal level, and we may see healthy marketing margins because they are expecting some kind of daily price revision post elections, and that is why this bullish wave is coming up on OMCs from Nomura. Let's also talk about EMS segment because Jefferies has initiated on Canes with hold rating and a target price of 2,900 rupees per share, while on Sirma SGS they have initiated with buy rating and a target price of 640 rupees per share. What they believe is that we may see the CAGR growth in the segment at 35% for the next 2 years, and in this segment also Sirma and Canes are the players which are margin accretive. That means the focus is going to be on these players only. On back of this, if you look at the EPS growth projections, they are expecting these companies to grow their EPS almost by 55 to 60% over the 2 years. And talking specifically about Canes, this is the only EMS player in OSAT and PCB segment right now. But if you look at the valuations, they are actually a little expensive, and that is why they are maintaining this hold rating and a target price of 2,900 rupees, but otherwise they believe that the company will do well in the coming days. So these are some of the brokerage reports based on which we will keep an eye on all these companies.
Absolutely, Gaurav, that's spot on. We'll be watching out for all of these stock-specific brokerage notes as well. But let me get on board my colleague Ansh, who's joining us with the FNO Snapshot of today and what the derivative outlook is looking for like today. Ansh, good morning. Now Nifty has broken that support at 21,900. So tell us what's happening with the FNO Snapshot and what can we expect today?
Good morning, Snehi. So, yes, the Nifty has actually given a breakdown from that 21,900 support, which was intact from last 1 month. But to ensure that the breakdown was not a whipsaw, means it was not a false breakdown, one must wait for a confirmation. If we see any pullback today till around 21,900, we can expect some sideways to positive move as well. In index options on upside, we are seeing a call writing happening at 22,000 psychological mark, indicating traders are expecting Nifty not to go above this level by tomorrow because tomorrow is Nifty expiry. Moving on to Nifty Bank, if you can see in the chart, Nifty Bank has been declining for 8 consecutive sessions, and last time when we saw 8 consecutive decline was in Jan of 2022. At that time, after the decline, Nifty Bank gave a pullback of around 6 to 7%, but after that it fell by 17%. On option front, we are seeing call writing happening at 46,500, indicating strong resistance around this level. Talking about FIIs, what they did in the previous session in index futures, they added almost around 7,100 longs. They covered 7,100 longs and they added 16,900 shorts. So net to net, we are seeing addition of around 24,000 shorts on downside, due to which the total long position has actually slipped from almost 37% to 32.6%. And due to this, the total long position is at 32 session low. So with this, we are seeing that FIIs are getting a bit cautious in the market. Now focusing on FNO stock that will be in focus, we are seeing very strong short build-up happening in Exat Industry, TCS, Cipla and Nestle. So keep an eye on the stocks.
Absolutely, Ansh. We'll keep an eye on all of that. But there's also a lot of stocks that are likely to be in focus today. So what is your list looking like at this point?
Right, so KIOCL will be the first stock in focus for today's session as a part of upgradation of the existing filtration system to achieve the desired moisture in their filter cake for pellet feed for iron ore having high alumina and slime. The company has actually installed vertical pressure filters in pellet plant unit. The capacity of each filter is around 100 tons per hour. Apart from this, Aditya Birla Sun Life AMC will also be in focus as the company wishes to exercise the over-subscription option to the extent of around 56 lakh equity shares. Kansai Nerolac has opened a sales depot at Jammu and Kashmir. Apart from this, GI Infra is also in focus as the project construction of 4-lane elevated road has been completed and the completion certificate has been issued by the authority engineer and has declared the project fit for entry into commercial operation with effect from 13 Feb 2024. JK Cement has participated or submitted the winning bid for Maha Coal Block and West Shahadul Coal Block in the recent commercial coal mine e-auction organized by the Ministry of Coal. And Aurobindo Pharma will also be in focus as they have received US FDA approval for a nasal spray which will be launched in Q1 of FY25. Lastly, JK Cement will also be in focus. Aurobindo will also be in focus as yes, we have already discussed that they have received US FDA approval. So keep an eye on the stocks.
All right, Ansh, thanks for taking us through that. But what are the market honchos making of the meltdown in the markets, and what should be your investment mantra amid the current volatility? Find out with Sameer Arora, Pratik Agarwal, and Puran Juweliat.
The outperformance is unrealistic and not in line with any form of history, provided the cycle is over. If you see in the middle of the cycles, it would have been similar outperformance in previous phases also. So it's basically a not an avoid, but a very, very over scrutinized thing now to buy a small cap.
For people who were hoping for a correction to happen, this is godsend. The growth of the country stays strong, the reform momentum stays strong. Globally, every market is good. Our own large cap part is good. So it is the smaller mids and smalls which are having trouble in the marketplace. So I think wherever one has confidence, this is godsend opportunity to accumulate.
This is not going to be 2018 repeat. I'm telling you all the positives. Those who want about or caution about the small cap investing or the growth in the small mid caps, they have also been talking about a structural change happening in India, the massive scale up of economy and its growth. So all those positives are definitely there, and earnings growth is much bigger than the prior period of 2018. So we have all the reasons to be remaining bullish, but this was very much required for a healthy kind of stock market functioning.
Well, that's all we could pack for you on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, Snehi Shah, as well as the entire team that put this show together. Thank you so much for watching. You don't go anywhere because the market takes all of the action forward.